New all-time highs. Say it with me. New all-time highs. New all-time highs. Bark. Nothing. But new all-time highs. Here we have it in a couple of things. I should take a breath for this because it's going to be quite a program. Yeah, new all-time highs today, baby, and SPY, Bitcoin, industrials. We'll get to the sheet, but there was an interesting move today. Low volume overall in the markets, but staples. You had a little bit of rotation into some other different kinds of sectors in the market with the rates dropping a little bit. We said it was going to mean revert quite a bit. We'll take a look, not specifically the rates chart, but some of these other low beta areas of the market. But today was about staples, momentum, and utilities actually rebounding all about 1.5% or so, while China plunged last night about 5.5%. We will look at the KWEB chart and new all-time highs for, say it with me, S&P 500, Bitcoin, the NASDAQ Qs, momentum strategy. And we'll take a look at that chart. I think it's the first time we've done it on this program. It had a big move today, obviously because of Tesla's monster 8% move over $300. The equal weight S&P, which means the average stock essentially. The diamonds, the Dow Jones, new all-time highs, in addition to the IGV, the Internet Index, and XLY, consumer discretionary, again, which is also known as the Tesla Amazon Fund. So, of course, that's on fire. And then this week characterized by, I mean, if you thought Trump was going to win, the playbook was exactly the same. And it's pretty interesting. I did a back test from 2016 to 2020, and maybe you saw it circulating on X or through Fidelity or, BlackRock and some of the other research pieces. But the big gains this week was an Ark. And Ark did absolutely phenomenally well during the relaxed, regime that his was in 2016 to 2020. And the regional banks, obviously lax on the banks. So these were the biggest parts of the market. And then, of course, we forecasted this last week. The biggest move was a 20% drop in volatility. Obviously, because we, I guess technically we take a sigh of relief. We technically didn't get a civil war. It was a quick decision and everything else. So a big week, obviously, and get ready to just keep on saying the S&P 500 goes higher to new all-time highs. No one's going to stand in front of this market from here to New Year's Eve. You'd have to be kind of a fool to think so, but we will take a look and where pullbacks will happen and so on and so forth and what have you. All right, so if you got some tickers or something, put it in the chat. You guys have been on pretty much all the tickers that have been in here. Of course, it's a buy everything market, but the things that you guys have put in, Tesla on fire, although that's obviously a very newsy play. Another one was Peloton. That's been ripping. There's very few weak areas in the market. So just buy something with earnings or Bitcoin. Okay, I would stay away from, commodities. We'll look at natural resources today that plunged. But go. So let's take a look here. That's pretty much the truth here. Bitcoin coming out of the piggy bank here. This guy checking his computer. Kind of looks like JD Vance a little bit. Here's the Eagle. Go Birds on Sunday. Beat Dallas. And yeah, just a lot of money being made in the market here this week. Some people have been asking, did I change my forecast? I have 600 S&P for Thanksgiving. I'm sorry, 590 for Thanksgiving and then 600 for New Year's Eve. We closed at 598. We'll take a look at the SPY chart in a second. I'm not exactly changing my target, maybe a little bit, but you're going to have a little bit of mean reversion, I do believe. So again, in case you want to see it in writing here, today was about staples, momentum, and utility. So some parts of the market that have not been, extremely sexy with the rates absolutely ripping in the past, couple of weeks. And then China absolutely crapped today, down 5.5%. We'll look at the KWEB, which got hit even harder. And then again, like just the same echo here, new all-time highs for SPY, the IBIT ETF or GBTC or you name it, the NASDAQ Qs, momentum strategy, industrials, equal weight, the diamonds, IGV, which is very important, Internet Index, and then XLY. And then again, double-digit gains in ARK and KRE, both about 13% each. So if you were long either one, pretty crazy. They are not correlated. This is biotech, Tesla, crazy stuff. And these are your regional banks, Bank of New York, all the others, all these other banks. Those were big winners, and they both did well during 2016 to 2020. It almost seems too simple. It's the exact same playbook that the market's forecasting out of his second presidency, and I wouldn't actually get in the way of that. I'm long those things. I'm looking at ARK. We'll take a look at the chart. And again, a big drop in VXX. We said the market was going to take a sigh of relief, and that's a monster drop in volatility. All right. Without further ado, let's take a look-see at the market intraday, and then I'll do, all the charts that we just mentioned. All right, so let's do the charts. That's me. All right, let's go. So this was the intraday chart on the SPY. So here was the day got started. Really nice all day, right around the European close. A little bit of profit taking. It was your first red bar essentially at 11:30, and then we peaked at 2:30, and then we immediately right after that, some good profit taking, I would say, all the way down to VWAP. Very important always. That orange line, the volume weighted average price. It is almost always my line in the sand. It's uber important. And that number was 597.99. We held it by about 41 cents. An impressive market today. VIX barely came off, about 70 bips or so, a digestion day, but all the indices were up. Things are looking good, onward and upward. So as we zoom out here, I had said before I hate how that box always shows up right where I freaking don't want it to. All right, so let me just pull this up here. So I had the accumulation phase ending or beginning for this. I got a question here. Gaston asks a question about Vale. Okay, we'll take a look. That's a teaser. Thanks for that. I will do it at the end of the show. So enjoy the macro, and then I'll look at one of your natural, an energy company here in Vale. If you got anything else, put it in. Thank you for that. I'll take a look. So the S&Ps here, my accumulation phase began on November 5th, so which means ending on or around November 20th. So another 12 days or so of bullishness. Obviously, we have a weekend coming up, and don't forget Monday, the bond market is closed. So don't think that rates are not moving at all. It's Veterans Day, so the equities market is closed. I would probably assume light volume like today. Got another question here, another ticker on Freeport-McMoRan. You guys are into the the different kinds of equities, not tech. So I will take a look. Thank you for that, Brandon. So yeah, accumulation phase ending on or around November the 20th. My target had been right around 590 to 592, 593, right around there at most. We're trading 598. So now what? Rather be a buyer than seller, obviously, which is why I'm, hella long. My target right now update is about up to the second right here, 596. So this is a little bit rich. A lot is baked in. Do see another 12 days or so of bullishness. As I said, pullbacks, I would not be shocked here because people will take profits at some point. I don't think it's going to be sizable, but the 21-day moving average, exponential moving average is 578. So I do see that, or 580, I'll call right here is an important mark. And I do see pullbacks taking us to that point. I'm sure you'll have some people complain and say, "Oh, that was the rally. No Santa Claus this year," or some nonsense. Don't buy that. The market has gone absolutely straight up since he was, elected winner Tuesday night. We went from 570, for goodness sakes, all the way to 598 in just a couple of days. Trees don't what? Rocco's not going to say it, but the answer is grow to the sky. And we've done quite a bit here, especially above that breakout about 586. So don't be surprised if you do get some pullbacks along the way down to about 580. We'll see which areas that may be providing sell-offs for, in terms of some sort of distribution. But right now, market has gone sky high. A good-looking bar today as well. We closed above VWAP. Wouldn't be shocked if we go a little bit higher, but don't be surprised if you get pullbacks. I know it sounds confusing, but the market has done a lot in just 3 days. So give it a break, okay? All right. Let's look at the stuff that really, really moved today. Some of these are going to be not so sexy. Some will be. The staples, I own this and have been taking a bit of a bath on it because it's not the most attractive part of the market, but XLP moved today in a multiple sigma manner. I know it doesn't seem like a lot. It's 1.2%, but look at that bar, and that tells you all that you need to know. The ATR, or average true range, on this is what is it here? It's like 70 cents. So a dollar move up is pretty significant. I like this group just in terms of like the everything rally and the animal spirits and the exuberance of the market. This should mean revert to its 21-day exponential moving average, which was 81.10. It did a lot of it today. Move that stupid box. Oh my God. All right. Yeah, so first stop, 81.10. And if things really go good for the group, 82 to 83, but I don't see that happening. So if you're in the trade like this, I do think it'll have a good 2 weeks. But in terms of top side, I don't think it's going to go up and away. 81, 82 target or so. I'm in the December calls. and it's not really doing much of anything. So not really the greatest position here, but I do think this will have a nice 2 weeks or so to about 81, 81.5, right around there. All right, this is an interesting one. Momentum, the Momentum ETF. This hit a new all-time high today, baby. A lot of you traders, I don't know if you guys are watching, a lot of you guys typically deploy momentum strategies, I'm sure, as do a lot of, the multi-strats, Citadel, Millennium, and they do obviously other things in terms of low vol strats and fixed income. But this is similar to my take on the market. Almost the chart looks very similar. I have another chart up as well on a different time frame. In terms of this, my target for this had been around 212. We're trading, essentially 214. I do like this area for the next 2 weeks. Tesla is obviously a holder in this, or a big allocation in this, I believe. Pullbacks can take you down on this to about 206, which would be a $7 pullback, which would be, 3.5% or so. So tough spots to chase here. I would not get too much in bed with the FOMO. I'd be careful here. We're not chase. Can it go higher? Yeah, sure. But also understand that this can drop 3%, when you see it open at any given time. So like the area if you're in it, but it's kind of at value right here at 214. All right. So kind of getting my the gist so far. We only looked at two charts. It was staples, a little bit of upside, not a ton. Totally different allocation here in momentum, like being in the position, but not a ton of upside right here. And then another not so sexy group, utilities. Rates, again, dropped today after the Fed did cut, as we predicted, 25 bips. It was pretty much in the CME Fed Tracker tool was 99% probability that they were going to do it. So rates dropped. Groups like this rally. In terms of utilities, a nice candle here. This had been getting pretty much the crap kicked out of it since the highs on October 17th from 82.5 all the way to the bottom here at 77. So that's quite a move for utilities. This doesn't look too bad. I actually like this one. I think this can march towards 83 actually in the next move. That stupid box. I think this could actually potentially get to new all-time or new 52-week highs in the next 2 weeks or so. I like this group. I'd like to see a little bit more money flow following it. I like the relative strength in it as of recently, but would like to see a little bit more money flow. What I mean by that is large orders on the close. Basically nice looking short-term candle patterns. Have just started to see it here on the 8th, and then a little bit here on the 5th, which was election. Was that the day after election day? Yeah, it's been a long week, or that was election day. So I like this group. I think this can march all the way towards 83, which would be $4. That would be quite a move in utilities. That would mean the rates would drop as well. And that's what I think what's going to happen. All right. I think you guys care about this, your questions. So a big mover down today, and then maybe this is why you guys are asking. I have not looked at this chart in a long time, but it registered a multiple sigma move. I suggest you guys pay attention. So this is a global natural resources ETF. I do not know what the main holding is in this group, but it's public equity, of course. Let me just look it up here. Actually, the constituents GNR, and that does not stand for Guns N' Roses. All right, always was more of a Metallica fan. So the main holders in this is ExxonMobil, BHP, Shell, Total Energy, Freeport McMoran, which is your question, Brandon. Freeport's a 3% weighting in this. So this got pretty smoked today, down 2%. Look at this 200-day moving average, pretty much a wall, like just a tank since mid-June, early June. So pretty notable level of resistance here for about 5 months. Don't like the group overall. I just think there's better areas. But I do like it for the next week or so. I think this goes towards 58. Kind of surprising to see the big drop today under the 200-day moving average. But in terms of this, I think this is, foreshadowing for some of your questions, in terms of the FCX. We'll see if it's a very similar chart, but that 56.28 level is really something to contend with. I see it doing that tug of war. It probably takes that, goes above it in the next week or two, and then back down. Don't really love this space, but do like the bullishness for the next week, if that makes sense. All right, next, obviously, China was down 5.5%. That dragged EEM quite hard. EEM was down in a multiple standard deviation manner, down 2.5%. Let's take a look. So EEM, very similar to what I have to say about the GNR trade. Like it for the next week or so. This chart looks better. So take back what I just said, actually. only thing I meant to say in comparison was like it for the upside for the next week. This chart, though, obviously much better than the last one, where it's tangling with the 200-day moving average. Here we have a rising 200-day, and the only close beneath it was the Japan Nikkei crash on August 5th. But besides that, it was before Valentine's Day when this group was weak. So this group looks good. Of course, it's not just China, but it got dragged down here. You have Mexico in here as well. Mexico is not doing super well. One of the few areas that have been just knocked down. This had a high on October 7th. Yeah, pretty surprising kick in the face today, but that's because of China's data overnight. I think they're going to need a lot more stimulus to get their economy back on the rails. But I do like this group. It's got to reclaim 45.20 first. So that's going to be important. And that is, about 50, somewhere 45.20 is, 50 cents away or percent or so. And then after I think it get to 46.5, you do need some of the bullishness in China, though. But I do like this group. I think it rebounds. So if you got it today on a dip, not a bad idea. All right. And then KWEB, this was really significantly affected today. A shares of China was down. FXI, for example, was down 5.7%. The KWEB was really a source of the pain, down 6.7% today for Chinese internet. Let me see if what I said for EEM goes for this. No, not so much. This really does look like a short-term top this October 7th in terms of Chinese internet. Do like still the rising 200-day moving average here, but for the next 2 weeks, I do not like it. I think it holds serve quite a bit, right around 32.65, but the downside, I would say, is right around 30.20. So I do see for the next 2 weeks, probably 30.20 target. So it will still hold the 200-day moving average. If it gets down to a 30 handle, I think that would be your entry. And the way people are placing bets in all different areas of the market, I don't think it's a bad bet to play. So I'm already in FXI January calls, and it's doing just fine, even with today's sell-off. But yeah, so that's my call for this. More downside, I think, for the China internet space. Top 3 gainers of the past 5 days. Let's focus on this because this is where all the heat was this week. Trump was elected early Wednesday morning, and biggest gainer this week, Monday to Friday, Ark, up 15.5%. If you bought this one, obviously Tesla is a major constituent of this. Look at this candle, a bullish engulfing. It actually entirely swallowed up the previous day. This looks super bullish. I mean, it's not really difficult to tell. In terms of the chart, my value, my target on the upper end was about $51. So we're trading 54. Again, trees don't grow to the sky. Like the group, especially for the next year, 2 years. I think Cathie Wood's going to be back in favor, even if she actually did sell a bunch of Tesla. Let me actually look right here at ARK and tell you what the main holdings are, because I don't know what the rebalance is on this, but it is Tesla, 14% of this fund. So she sold some before, because I think she said she was afraid of the election and whatnot, but she still holds 14% in Tesla, 9% Roku, and 9% Coinbase. And Coinbase obviously very correlated with Bitcoin, and that's off to the races. And also owns 5% Palantir, which has just been kicking butt, and Robinhood 5%. So this is a great growth ETF. I'm more of an XLG S&P Top 50 guy, which I addictively buy, and that's very heavy Apple, Microsoft, Nvidia. This is more of like the moonshots, a little bit smaller market cap with like Roblox, Block, Shopify, etc. Shopify was also one of the best stocks performers during Trump's first tenure from 2016 to 2020. Obviously, different economy. It was in growth mode, upstart, but it's just interesting to note that she invests in companies like this, and I would not shake a stick at her. And in terms of just strictly looking at the chart here, like I said, $51 is my target. But then support. I mean, any sell-offs with this would take it down to about $48, and this has give back as well. So we'll see how Tesla trades. Obviously, it's 15% or so of this fund, so very important. But yeah, like this, maybe for the next week or so, be careful where it is right here. But in terms of next year and beyond, this looks like it's back. Next, the KRE. I'm on the KBE, very similar allocations, but the regional banks just behind ARK. So ARK, the killer this week, up 15.5%. Next was the KRE regional banks up 11%. This group doesn't move in this way, okay? They just don't. So absolutely monster. Is it overdone? We'll see. The Fed's cutting 25. There's a lot of good things happening. So I would not fight the tape. I like this group, to the bullish side. But again, my target on this is about 63 half. So we're trading 65. It's just a bit rich. So I'm long the KBE. I had give back yesterday. Today was doing just fine. So be careful of these groups. This group honestly had done nothing or just based since the end of July. And now it finally broke out on the election news. So a good looking group, like it for the next year. And so there's all kinds of different lax rules in terms of asset caps. And obviously the Fed's cutting at least another, 2 times. So it's going to benefit this group. But again, my target is 63. Pick your spots. Pullbacks will probably take you to about 60, which would be a big drop. We're at 65, so it's almost like 10%. So be careful. Volatilities in this, maybe some bad news or earnings from a small one gives you an opportunity to get in. Next, the almighty IBIT up 11% this week to a new all-time high. This has momentum right here. Watch it this weekend. It's a beast. We thought it was going to break out. I was actually doing some work on this last night. I have a 90K February target for Bitcoin, and for this IBIT, that translates to $52. Today up 20 bips. So not a huge move today, but it is a new all-time high here. Similar to what I just said, a lot of these things have run up to value, to upside targets. So my target for this in the next, 2 weeks was 42.5 to 43. Okay, and again, this was when it was trading. We were at the day before the election. This was trading $38. So it went 38 to essentially 44 in 3 days. Curb your enthusiasm, okay? So like I said, I'm long Bitcoin in a couple of accounts. Thankful that it's finally breaking out. But do get ready for some digestion. And then maybe look out for some anecdotal stuff. If your aunt's asking you at Thanksgiving dinner, should I be buying Bitcoin? Bull markets back again. Truly the roaring 20s. Place bets, buy something, okay? Don't try and short this market. You're going to get your face ripped off, all right? And be careful with value. Things are expensive. They're probably going to get more expensive. It's just the way it is. So IBIT like this. Pullbacks on this probably take you to about $40. So that'd be a 10% slip. Bitcoin's trading, like 77K or something. So that would take you down to about 71, 70K or something on a sell-off if you were to get there. All right. Glad I'm long, though. All right, top 3 loser the past 5 days. So these were the winners. So what was the, in addition with Harris, what were the losers this week? And they're similar. They're correlated with her, okay? And we'll take a look at that. That's a slam on solar stocks. That's the next chart we'll look at. But here, let's take a look at what Volatility did this week. Volatility down 20% this week. That was your best trade on the board. If you walked in last Friday at 4 o'clock or Monday morning at 9:31 and you shorted VXX, congratulations. Optimism usually prevails, and this thing absolutely got cratered down 20%. The 200-day moving average continues to slide. It is at 51.35. This is the inverse of the market, what I was saying in terms of upper targets. Everything's there. So my downside target for this is right around 46, and we're at 44.80, right? So again, a little bit overdone. Today was down just 70 bips, total healthy digestion. Wouldn't be shocked if this gets to about $46. But again, this is very, very low, and the 52-week low in VXX is 40 even. So about another 10% for what it's worth. But that was the best trade on the entire market this week in terms of ETFs. All right, next. So this is what I was talking about with the with Harris. So this is the solar ETF. We said look for this one. This was very highly correlated with our chances in terms of the subsidies and EV tax credits. So this was down 4% today to new 52-week lows. A lot of these companies in this ETF are angling towards bankruptcy, or they're just not doing very well. The main holders in this are First Solar and Enphase Energy. That comprises 16% of this ETF. They do not look good. I was personally short Sedge, Solar Edge Tech, a while ago from like $80 to 20, or $80 to like 30. And I think there's enough meat on the bone, and this thing's continuing to go to, where did it close as of today? It's a piece of crap. It closed $14. It was 103 last year. So these companies are, many of them are doing the chart of death. Top left of your screen to the bottom right. A lot of the solar ones, except Musk, because he's butt buddies with Trump. So that one has interesting, different kind of correlation. That's what I was talking about the other day. Buy XLY is a great way to play that one, because if you get the health of the consumer, specifically, the Amazon buyer, that's the way to play it from XLY. But anyway, so this one, TAN, hold on, let me pull up on the charts. Do I have it here? Yes. Okay, so 36.06 today close. Just looks nasty. It's funny. You're going to have some snapbacks in the market, because everything that looks good is that upside target. Everything that looks bad is at the downside target. My downside target for this is 35.40, so maybe a little bit more downside. Do not like it for the next 2 weeks. The air is going to come out of this, so a little bit more downside for this. Wish you'd get a tag to the 200-day moving average. That was so amazing. The day of the election, this thing was trading $42, and then now new 52-week lows to 36. Life comes at you fast. All right, so TAN down 10% this week. And then the next big loser, there wasn't a ton. It was volatility, because the market took a sigh of relief now on certainty. And now, people are anticipating the Santa Claus rally that's happening in a month and a half. Solar, because, the Dems lost a lot of power, and the solar space is not going to do well next year. And then the next one is silver. They liquidated silver this week, not massively, but it is down 3.5%. We talked about starting a position in this. I'm personally long GDX, so I don't want too much metal correlation in my portfolio. But this looks good. Kind of surprising in what a bad week it had, down 3.5%. Today, it was down 2.1. I do like this, though. I think you get a nice mean reversion pop to 29.75, which is its 21-day exponential moving average. So 29.75, that would be $1.20. That's a 4% upside. You could easily see SLV gap up 4% one day. Then ultimately, if really a lot more investors come into this, I think you get this to $32, which would be new 52-week highs. A beautiful looking chart. It didn't even tank. Why would it? In the Japan Nikkei crash. But this hasn't looked weak, really exceptionally weak. And I'm doing that based on the close on the 200-day since March. And in terms of, steadily closing under the 50 RSI, it had some bad times in July, but this looks like a good buy, especially if you get it under 29.70. And yeah, if I wasn't long GDX, I would get involved in this. All right, top 3 absolute trades of the past 5 days. We were just harping on it. Short volatility down 20%, 2-0, massive. Then the next best trade was your long Ark, up 15%. And then third best long KRE, up 11%. Now for the all-important, I did not forget about you guys, Gaston and Brandon. I just want to do this. It's very important. Only do this on Fridays. The top 3 absolute trades of the past 52 weeks. And to see which of these have momentum now, okay? The best trade on the board in the past year from the last November 8th to today is, ding, 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 ding. You guessed it, GBTC up 119%. I'm not going to harp on this too much because we just looked at IBIT. But we had said before, this chart looked tenuous, a little bit scary since the Japan crash, August 5th. Had a lot of work to do. Did a lot of heavy lifting here, honestly. 200-day never batted. In eyelash here, it was continuing to rise. And now here we are finally back at levels, in terms of GBTC, they have an interesting borrow premium discount back to July. Guess on S 100% in DLS in 1 year. What? Can you rewrite that? DLS? If you could just rewrite that, I'm not sure what you're saying. So I'm talking about the best trade in this past year is GBTC, up 119%. And here is where we get that from. It was $27 last year, and today we're at $61, and that's the math, 120%. The best trade on the board. I don't give stuff like this a short leash. I actually just had a friend ask me, when do you intend to sell IBIT? IBIT to me is delivering uncorrelated returns. That is a core part of my stock portfolio is how I'm treating it. 120% in dollars, GBTC I'm talking about. A lot. Yeah, it's the best ETF performer in the past 52 weeks. Yeah, it's more than a double. No one else comes close. All right. The second one, and it's good to see this one. It's been an interesting trade. Semiconductors, the second best trade of the past year. And of course, one of the big powers of this is NVIDIA, which is making new all-time highs this week. Once it broke over that 140, very nice. I personally own that. Full disclosure, I like this group. I think there's meat on the bone here. Not a ton, but I think this is going about 267 is my target, and that would be getting very close, a rock's throw away almost, of the July highs. So I like this group. A lot of other areas we're saying, oh, it's tired, this is too much when we're opening the program here. This actually looks like it has a little bit left. So if it gets to 267, where do we close? Move that stupid box. Oh my God. So that's about $8. Yeah, that's a nice return of about what, for the next 3% or so for the next 2 weeks. So I like this group. I like the semiconductors. I think you're going to have nice strength out of NVIDIA, and it's the second best trade of the entire past year. So I'm not like some sort of Nostradamus or genius. You have to be in these trades. I own Bitcoin in several accounts, and the semiconductors are the second best trade. I own NVIDIA, and then a lot of mega cap tech. So that's obviously, like I said, cracked out on NVIDIA. And then the next one is KBE, the third best trade of the past year, and that's up 61%. It's trying to claw and reach for the semiconductors lead, but I don't think it's going to quite do it. But the Fed is helping this group. This looks good, but the only thing is this is at target. I think this doesn't have as much meat on the bone in the next 2 weeks as semis does, because this has just ran up so much. My target for this is 58.59, and we're at 59.5. So this is a bit rich for me. I am long, obviously, literally the December calls, the 52s, deep in the money, selling calls against it. Monster trade, obviously, since the election due to lax rules next year. So you got to be long this. These are the areas you can't ignore if you're looking for alpha. Just be careful of your entries because they're highly volatile. So Bitcoin, semis, banks. That is really, really important. And Bitcoin did well from 2016 to 2020 during his first tenure. Semis and mega cap tech and like Ark and that area did super well. And then banks did really well. So I think just don't, it sounds crazy, but don't, rethink the entire playbook. I don't think it's that necessary. All right. I kept you guys waiting long enough. Let me take a look. So Gaston, your first question was, what do you think about Vale? Let me take a look. Boopity, boopity, bop here. I haven't looked at this chart in quite a while, actually. So obviously Vale is an ETF, as an ADR out of Brazil. They do iron ore. This is a massive company, $48 billion on $41 billion revenue. The chart looks bad, man. This is not, I don't know what's your question specifically. In the long term, I really like the company, but I don't know when to enter. Yeah. So I'll give you a short-term perspective first. I do not like this group. This thing got tanked today, 5.5%. I told you GNR, natural resources. This was not a hot area today. I think this is actually going towards 1020 in the next couple of weeks. So you're going to have another 3% on sale. This chart looks ugly, man. I would rather overpay in terms of it getting some stability. So I do not want to see this 200-day dropping the entire time. I'd rather at least see it steady, Gaston, and then start to actually increase a little bit, and then you can take a flyer. And I think it's going to take more than like a good earnings report for this to raise this. So to be honest, I would rather short this if I had the opportunity to 1170 because I think it'll tank. But this does not look good. I actually think for the next 2 weeks, this is headed towards 1020, which would be another, as I said, 3% or so on sale. So yeah, your question again, don't know when to enter. I say don't right now. And the 52-week low is 966. Yeah, I think that'll hold. You really need to see this at least build a base here and start to rebound. What can you recommend that pays dividends? I'd have to run screeners specifically in that energy space or just overall in the market. Like what kind of exposure you're looking for. There's telecom companies that look a lot better than this chart, and they pay, pretty crazy dividends. Energy dividend payers. I'd be careful. I understand there's a lot of people like that. Usually when you get paid in crazy 8% yields and stuff through divs, it's because the stock is absolute crap and you're taking a 40% hit on the stock, but you got your 8% div. So I'd just be careful on that. I can look it up, and then if you remind me again on Monday, I'll make a note and I'll look up for energy paying, div paying ETFs. Because right now I'm not going to be able to do the screener, and we're going on 35 minutes here. Yeah. What time on Monday? Oh, same time. I'm here at 4:15. We go live. All right. So I'll take a look. And you want specifically a company that does that, not an ETF, because you're going to get higher dividend from that. We'll see. You're going to have to look at just being lazy. I mean, it might be the best thing. Go to ExxonMobil. Like, you got to look at some of the more recent energy companies that made 52-week highs, and they're going to have maybe not the craziest, sexiest dividend that you're looking for, but a better space than this. Don't take where was the stock last year? The stock was at $16 and it's trading 10. Yeah, don't take almost a 40% hit in the stock to make a 8% div. What's the div on Vale? Yeah, exactly, 12% yield. That's don't take that trade. Okay, and then the other question. Oh, thanks for waiting. It's been a while. FCX, is that the only other one I got? Boom, 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 boom. Yes. Okay. So we'll do this and we'll wrap up. So FCX, of course, is Freeport McMoran. Better looking chart. Okay. Freeport. Let's take a look at this one. So Freeport's in the metals and mining space. Of course, these guys do copper, gold, North America, South America, Indonesia. They're not specifically Brazil. And you got to be careful with that as well. Brazil's not the best area. When you're picking a stock, and I was talking about this when I was doing my friend JC's show, All-Star Charts, you always want to do top down. So energy's not exactly kicking ass right now, so you might not want to go right in the heart of that, but you want to look at the best performing sector, subsector, and then take the company out of that. Don't go the other way. So Brazil as a nation is weak, and then energy's weak. You're really just swimming upshore. You're gonna get your hip cracked. Okay, so just be careful with that. This one a little bit better. So Freeport McMoran, 200-day moving average, Brandon, is rising steadily, a little bit slow with a 52-week high put in right around Memorial Day back there on May 20th at $55. Today's close is 46. I like the group for the next 2 weeks. I don't know what your strat is on this, Brandon. If you want to say if you're trying to hold this till you're gray-haired, or if you're holding it for zero DTE or a 1 week options play or something. But I think this will mean revert, pop to 47. Not much of a pop, but ultimately I think this could reach $50, but not a ton more than that. A bad day for, like I said, this entire group today got absolutely hammered. Oh, he wrote 2 week swings. So yeah, I think it'll reclaim. So the 200-day moving average is 46.16. It closed just a hair above that today. I do think this will get to 47, tops 50. I just don't think – I'm actually going to take that back. I think 49 is as good as it gets for this group in the next 2 weeks. It's got to take out 47 first and hold that. And then I think possibly if you get the animal spirits in the market, it can get to as high as 49. Woo! All right. Anything else? I think that is all. Monday is Veterans Day. Diffuse some kindness out there to people in your life. Some people are going through it either way. And enjoy the weather out there. Global warming is a real thing. It's like 80 degrees where I am. It's crazy, and it's almost Thanksgiving. All right. Peace out. Talk to y'all on Monday.